Well, we meet again. It's time for your Twin Cities Real Estate Market Update. I'm Joe Carmick. Let's talk about what's going on around the Twin Cities. Let's start you off with home prices. Now you can see right here, January didn't see too much change. There's not going to be a ton of surprises, fortunately, in this market update. With January, we did see our prices go down just a touch. That's completely normal for this time of year. I believe from December's number, it was only a few $100 there, so not a major decline. And you can just see where we were the past few years. Really not a lot of surprises. And I'll go ahead and zoom out for you and we'll show you that is the rolling month-to-month change. So if you've missed it, you're gonna have to go watch a different market update, but you can see the seasonal changes there. And then if I switch to the rolling 12-month average, which is what you're looking at here, this is taking out seasonality and just showing you how it's changing over time. So I've zoomed out here quite a bit for you so you can see how things have changed. This is a little bit surprising to see that to see that rolling 12-month number going up so much. You can see there pretty much all of last year we stayed essentially flat, which wasn't really a bad thing. We were kind of glad to see that. That was fueled by those high interest rates, which we're going to talk about in a second where we're at with interest rates. But I think what's actually really fascinating for me a little bit with this is there's actually more optimism in the market right now than there actually is price reductions on those interest rates. And so I think people are loving the warmer weather. They're getting out and starting their home buying earlier this year. And so I think that's the main thing why we're seeing those sale prices going up. Things are quite competitive, as I'm going to show you with the month supply of inventory. And that's what's driving these home prices going up, which is, again, just fascinating because that's actually happening a lot more than interest rates are really fueling. So then we'll go over to that month supply of inventory that we're talking about. Now, this is the relationship between are we in a buyer's market or a seller's market? The lower we are, the more of a seller's market we're in. And this is your month-to-month change. So it looks kind of chaotic. If it's stressing you out, just give me a second here. But if you've been following me for a while, month supply of inventory always goes down, as you can see there. That's that bottom of the valley when we have the fewest month supply of inventory. And we've expected to see that number coming up. So not a big surprise that we ended higher than we were. However, I actually wouldn't have been surprised if that was a little bit higher. This isn't really consistent with the shift that we're seeing in the market because this kept it competitive during the winter months a little bit more than expected. So while that's interesting, the rolling change is really what we're keeping our eye on. If you're worried about things crashing, it's still not happening, as you can see here. There's no real major shift in our market as far as that rolling 12-month average goes. This is, again, the 12-month average, and I've zoomed it out quite a long ways. So this red line I've drawn there, that's where we want to see things if we were in a perfectly balanced market. Obviously that basically never happens, but this will give you that relationship. We bottomed out really, really hard after COVID and we've seen it starting to swing back, but it really is doing a very gradual swing. Even with January that stayed on par for December, we're at 2.0 month supply of inventory, which is about a third of where we would like to be. Now, personally, I'm curious if we ever really get back to being a balanced market or at least hitting that the old balance of being 6 month supply of inventory. I think generally our world just moves faster and home buyers and sellers are faster moving, faster paced. And so I think that will sell things off more rapidly. So just my own hunch is that we won't really get back to that old 6 month margin there, but that's what they say. So while we see that month supply of inventory chart changing over time, that'll affect our days on market, of course. So here's how we're looking for that. Kind of interesting. I'm actually a little bit surprised. I guess I shouldn't be. I don't know why I'm surprised by things, but you've been watching me, and I said, all right, if we're doing this number thing, maybe we'd be curving back up like that over time. Watching those days on market come up. We weren't. They're actually still selling pretty quickly in January. So only 39 days on market is definitely a little bit lower than where I would have expected. Mid 40s would have been okay with me. I wouldn't have been surprised by that number. But, who's to say? It's got to be that warmer weather, I think. And again, some optimism in the market is affecting those things. This is the rolling 12-month average, which was actually, a little more surprising too. We were at 19 days on market November, and then December and January's numbers both stayed flat at 18. So kind of interesting. Again, as you've seen here, we had interest rates that were improving more and more and more through most of last year, and then they kind of stopped. And despite that, our days on market still moving pretty quickly. So now about them pesky interest rates. Here's what we're looking at. So starting on the left there, you can see the 1-year changes. This is Mortgage News Daily, is that blue line there. And things had been quite high, and then we saw this big drop, and we're thinking, sweet. And if I had to have guessed, I would have thought we would have stayed and kind of gradually gone down through most of 2024, getting slightly better. I'll give you rate predictions in a second, but that's currently not what's going on, even to line up with what their predictions were, to be honest with you. So on the right side there, 1 month changes. The blue line's always kind of volatile, but we've just sort of been on this slow incline from about 6.6 up to about 6.8. So it isn't really a huge major surge or anything, but that was pretty surprising. And then those rate projections here for you. Now, I really take these with a grain of salt, to be honest. This is from Keeping Current Matters, reporting Fannie Mae's numbers. So this is what they're projecting. You can kind of just focus on this right side column here, and you'll see this is what they're saying is supposed to happen for January. Currently that we're at 7.14, we're obviously well above that. The Fannie Mae numbers are slightly different, and if I'm not mistaken, those do report lower than Mortgage News Daily's numbers. But in any case, 6.4 now, and they're saying we should get down to about 5.8 by the end of the year. So that is pretty consistent with what I've seen from other sources. Generally just supporting the idea that with the presidential election coming, every year for the past 20 years that we've had presidential elections, rates have gone down. Then you factor in they were really high and needed to come down anyways, and the overall shift in the market, really not surprised. So there you go, quick and easy this month. That is your Twin Cities real estate market update. I would love to help you with your move, so feel free to give me a call. All my contact info is down below, and I'll see you next time.